In the previous class, we discussed few problems and solutions of decision making problems. Today, we will continue with that and we will discuss few more problems and their solutions in decision making, right. So, let us go to the first problem now. So, machine manufacturers 10,000 units of a part at a total cost of rupees 21, right. So, it manufactures 10,000 units at a total cost of 21, of which 18 is variable. This part is readily available in the market at 19 per unit. If the part is purchased from the market, then machine can either be utilized to manufacture a component in the same quantity contributing rupees 2 per component, or it can be hired out at rupees 21,000. Recommend which of the alternative is profitable. So, this is actually a decision making problem which is called make or buy. So, it is called make or buy. So, you see in this problem the company can manufacture, company has two options. So, company can manufacture in its own plant, or it can be it can be it can be bought from outside, right. Okay. So, first alternative is what? First alternative is if 10,000 units of the part are manufactured internally, right. So, variable cost of 10,000 units at rupees 18 per unit. So, variable cost of 10,000 18 it comes to rupees 1,80,000, right. What is the second alternative? 10,000 units of the part are purchased from the market and the machine is utilized to manufacture 10,000 units of a component contributing rupees 2 per unit, right. So, purchase price of 10,000 units of part at 19 per unit, it will be 1,90,000, right, less the contribution received on utilization of the machine time by manufacturing 10,000 units of component, that generates to the 2 per unit contribution. So, it is getting 20,000 unit. So, net cost is coming 1,70,000 units. So, 1,90,000 minus 20,000, it is 1,70,000. There is a third alternative. If 10,000 of the part are purchased from the market and machine hour is hired out, right, here it is saying it can be hired out at 21,000. Okay, so here is one problem on decision making. A machine manufactures 10,000 units of a part at a total cost of a machine manufactures 10,000 units of a part at a total cost of 21, of which 18 is variable. This part is readily available in the market at 19 per unit. If the part is purchased from the market, then machine can either be utilized to manufacture a component in some quantity contributing 2 per component, or this machine can be hired out at rupees 21,000. Recommend which alternative is profitable. So, here you see in this problem there are three alternatives, right. The first alternative is the company can manufacture 10,000 units entirely. Second is that it can purchase it from the market and the machine can be utilized for manufacturing 10,000 units of the component, another component which will contribute rupees 2 per unit, right. And there is a third alternative, that the entire 10,000 units can be purchased from the market and this machine can be now hired out, right, at 21,000 to someone else who can use it. So, I need to see, I need to take a decision, that which alternative is best for me. So, the first alternative, in case of first alternative, the variable cost of 10,000 units at rupees 18 per unit is 1,80,000, right. Second alternative is 10,000 of the part are purchased from the market and the machine is utilized to manufacture 10,000 units of a component contributing rupees 2 per unit. So, purchase price of 10,000 units of the part at rupees 19 is rupees 1,90,000. Less contribution received on the utilization of the machine time by manufacturing 10,000 units. So, it is getting contribution of rupees 2, so it is 20,000. So, purchase price, it is spending 1,90,000 and it is recovering 20,000 by manufacturing another component. So, his net cost is coming at 1,70,000 here, right. And what is the third alternative? The third alternative is he can purchase, right. He can purchase the units at 10,000 units from the market itself and the machine can be hired out. So, purchase cost, if he purchases at 19 rupees, so his cost will come at 1,90,000 and by renting it out, by hiring out the machine, he will receive 21,000. So, his net income, net profit will be 1,69,000. So, we can see from net cost will be 1,69,000. So, I can see here in the first alternative the cost is 1,80,000, right. In the second alternative the cost is, net cost is coming 1,70,000 and in third alternative the cost is coming 1,69,000. Now, in all the cases you see the fixed cost is not getting impacted. So, in the question nothing is mentioned about the fixed cost. So, we can assume that the fixed, in all the three alternatives the fixed cost will not change. So, the fixed cost is an irrelevant cost here. It is not a relevant cost, it is an irrelevant cost here. So, we are ignoring the fixed cost, right. So, what conclusion we can make, right? We can make the conclusion, because the cost in the case of third alternative is the lowest. So, we can go for the third alternative. So, we can take this decision. Okay, fine. Next problem, the high-tech manufacturing company is presently evaluating two possible processes for the manufacture of a toy and makes available to you the following information. What is the information? The information is variable cost per unit 12, right, and 14. Selling price per unit, it is same for both the process A and process B, it is 20, right. Total fixed cost per year 30 lakh and 21 lakh. Capacity in units 4 lakh 30 and 5 lakh, right. Anticipated sales in next 2 years in units 4 lakh and 4 lakh, right. So, these are the anticipated sales 4 lakh and 4 lakh. You are required to suggest, number 1, which process should be chosen, substantiate your answers. Number 2, would you change your answer given above if you were informed that capacities of the two processes are number 1 6 lakh units and number 2 5 lakh units, and why? You need to substantiate, right. So, you see the company has two possible processes. So, you need to choose either from process A or from process B. So, if in the case of process A the variable cost is less, right, in case of process B the variable cost is more. However, the selling price under both the processes, the process A and process B, is same, it is 20. The total fixed cost is high in case of process A, but lower at 21 lakh in case of process B. The capacity is however higher in process B, right, 5 lakh, and in case of process A, it is 4 lakh 30. So, but in both the cases, in next 2 years, the company is expecting the same amount of sales, that is 4 lakh each. The first question is, we will first solve the first question, which says that which process should be chosen, right, and how to substantiate the answer, right. So, the first solution, selling price per unit 2020, process A, process B 2020, less variable cost 1214. So, I am getting a contribution. In the case of process A, usually the contribution is 8 per unit, and for process B it is 6 per unit, right. In case of process A, it is 8 per unit, and in case of process B, it is 6 per unit. So, total annual contribution, if I multiply the sales units, right, I will get the total contribution. So, here you see the sales units are given, right, it is in both the cases it is 4 lakh, right. So, if I multiply the contribution per unit with the sales units, I will get the total contribution. So, in the first case it is 8 into 4 lakh, so 32 lakh, and the second case it is 6 into 4 lakh is equal to 24 lakh, right. Less total fixed cost is 30 lakh, right, here, and in the second case it is 21 lakh, right. 30 lakh and 21 lakh is my fixed cost. So, if I deduct this, you see in the first case, right, my total income I am getting is 32 lakh minus 30 lakh, so 2 lakh. In the second case, I am getting 24 lakh minus 21 lakh, so it is 3 lakh. So, in second case it is higher, right. So, the decision I can take, right, decision I can take is that under the present circumstances, without considering the other subjective factors, right, the process B appears to be a profitable option, right. So, that I can do. Okay. Now, I have if I calculate, right, if I calculate my total contribution, if utilized to present capacity and sold, right. So, it will be how much? It will be 34 lakh 40,000, right, because here you see the capacity it is given 4 lakh 30 and 5 lakh, right. So, both these cases, in both these processes, it is working under capacity, right. So, total contribution is 34 lakh 40,000 in case of process A and 30 lakh in case of process B, right. Less the total fixed cost per year, it is 30 lakh and 21 lakh. Okay. So, if I deduct 30 lakh from 34 lakh 40,000, I will get the profit 4 lakh 40. Okay. And if I deduct 21 lakh from 30 lakh, I will get the profit of 9 lakh. In this case also, you see the process B is giving me the higher profit, right. The process B is giving me a better profit compared to process A. Okay. So, it should be chosen, fine. Now, I am going to the second problem. The second problem is saying that in case of process A, the current capacity is 4 lakh 30. If I change this to 6 lakh units and if the capacity in B remains 5 lakh, will my answer change, and why it should be, right? That is my question. So, if I do that, right, total contribution with 6 lakh of in process A and 5 lakh in process B, then my revenue will be 48 lakh and 30 lakh, right. So, it remains 30 lakh you see here, right, but in this case it is increasing. However, my total fixed cost, it remains unchanged. So, here you see in the question, if you see the question, it is talking about the increasing capacity, but it is not didn't say anything about the change in cost structure, whether the fixed cost will increase or decrease or variable cost will increase, or that no information about that. So, I can assume that the cost structure will remain same, the fixed cost will not change, right. So, it is 30 lakh here, earlier also you see it was 30 lakh here, 30 lakh here, and it will be 21 lakh here, earlier also you see it was 21 lakh here, 21 lakh here, right. If I deduct the fixed cost from my revenue, what I will get is my profit. So, 48 lakh minus 30 lakh, it comes to 18 lakh, and 30 lakh minus 21 lakh, it comes to 9 lakh. So, in this case you see it appears that process A should be better, right. So, in the earlier two situations we considered that process B is better. In this condition we are finding that the process A is better, right. Now, if you look at the cost structure, right, then probably you can find out that why it is happening. What is the answer? The answer is, you see, in the first case I am increasing the sales revenue, but I am not increasing the sales revenue in case of process B, right. And if you take the fixed cost component, right, the fixed cost is higher in case of process A compared to process B. In process A, the fixed cost is 30 lakh, in case of process B, it is 21 lakh. So, in the first case, the process A, the break-even point of high, break-even point is little higher, but once it crosses the break-even point, right, and increases the sell revenue, it starts getting the benefit of economies of scale. Because if you remember, we discussed earlier, with increase in production volume, the fixed cost per unit falls, right. So, here it is increasing the sell, and that is production, right, but the fixed cost remains same, though the fixed cost per unit it is falling here, and the variable cost per unit it remains unchanged. There is no information in the question that what is happening with the variable cost component, whether it is changing or not. So, we assume that it will remain same, right. So, because of that, when the sales volume is high, the total profit is going up with a rise in production level, which is not happening in case of process B, right. So, the underlying learning is that if you have a higher fixed cost, it is always better to go for higher sales volume by capturing the market, right. Take a strategy, maybe pricing strategy, the selling strategy, etc., to increase the market share, to increase the sales volume, and in that way increasing the the profitability of the company, right. One little note here, differential cost analysis is also applied in order to assess whether it would be more profitable to sell a product as it is, or to process it further into different products to be sold at an increased price. If incremental revenue as a result of further processing is more than the additional cost of processing, further processing is recommended, right. So, if someone processes further, the generation of revenue must be higher than the cost incurred, then only it will remain profitable. So, we will go to the next problem. So, this third problem. In a factory producing joint products of two varieties, the following data are extracted from the books. These are the particulars: sales of products X and Y rupees 7,50,000, direct material 2,25,000, direct labor 1,10,000, variable overhead 150% on labor 1,65,000, fixed overhead rupees 2 lakh. The analysis of sales reveals that the percentage of sales of product X is 66 and 2/3%. That means, it is 2/3. Management contemplates to process further the joint products so that they could be sold at higher rates. Facilities for this are available. The additional expenditure for further process and the total sales anticipated at higher selling prices are given below. Make recommendation presenting the effect of the proposal, right. So, what is the proposal? Proposal is to process further, right, whether we should process the products to a next level or not. So, this is the cost structure. So, sales 7 lakh 50, direct material 2 lakh 25, direct labor 1 lakh 10, variable overhead 1 lakh 65 and fixed overhead rupees 2 lakh, and sales reveals that the percentage of sales product is 2/3, right. Now, this product X and product Y, first is sales after further processing 6 lakh plus 3 lakh, so rupees 9 lakh. Additional material 50,000 and 20,000, 70,000. Additional direct labor 20,000, 8,000, so 28,000. So, this is these are the information given. How we can approach this problem? Let us go to the solution, right. So, product X, product Y. So, there are two products, right, product X and product Y. Sales after further processing, it is 6 lakh and 3 lakh, 6 lakh and 3 lakh, total is 9 lakh, right. Less sales before further processing, it is 2:1. You see, here it is given in the question that it is 66 and 2/3%, that is 2:1, right. So, it is 2:1. So, 5 lakh and 2 lakh 50, total is 7 lakh 50. Additional revenue it is getting is 1 lakh, right. 6 lakh minus 5 lakh is 1 lakh, and 3 lakh minus 2 lakh 50, it is 50,000. So, total is 1 lakh 50. Additional processing cost, right, additional processing cost is additional material 50,000 and 20,000, so 70,000, right. Additional direct labor 20,000, 8,000, so 28,000, and variable overhead 150% of labor, that is 20,000 into 150%, it is 30,000, 8,000 into 150%, it is 12,000, 28,000 into 150%, it is 42,000, right. So, if you add this 50,000 plus 20,000 plus 30,000, you get 1 lakh. 20,000 plus 8,000 plus 12,000, it is 40,000. 70,000 plus 28,000 plus 42,000, it is 1 lakh 40,000. So, here you see what is happening. Additional, in the first case, in the case of product X, right, the additional revenue it is getting is 1 lakh, the additional cost is also 1 lakh. So, there is no benefit, right. At least from this information it appears that it has no benefit. It may get some intangible benefits, right, from this, like for example, they can get into a new market, they can they can attract new customers, right, increase the market share, these kind of things are possible, right. But from data which is given, product is not getting any additional incremental revenue, right. But in case of product Y, the revenue, incremental revenue is 50,000 and incremental cost is 40,000. So, additional revenue what it is he is getting is 10,000, right. So, 10,000 additional revenue he is getting, right. So, out of X and Y, it appears from here that product Y should be processed further, right. So, we can however, as I said that we before taking a final call, we need to make a judgment, right, on non-cost factors, like for example, whether it will increase the market share and company can gain a long-term sustainable benefit out of it, whether it can put a challenge before the competitors, right. It is possible that at the moment it may not be giving sufficient incremental revenue, but with time, right, after some time it may start generating additional revenue and generate additional profit. So, these factors also we need to take into account while taking a final call. However, given the data in the problem, at the moment it appears that product Y is better compared to product X, and we should go for further processing of product Y. The reason is the additional revenue is more than the additional cost, right. Additional revenue is 50,000, but the additional cost is 40,000. Fine. Next problem, right. A company has a capacity of producing 1 lakh units of a certain product. The sales department reports the following schedule. So, you see the selling price, in this case the company is charging different selling price at a different volume of production. If the company operates at 60%, then the selling price per unit is 90 paisa. If it operates at 70%, it operates at its selling price is 90 paisa. However, if the selling volume, right, volume of production and sales volume, if it comes down to 80%, it is becoming 75 paisa per unit, right. At 90%, it is 0.67 rupees per unit, and at 100% it is selling at 61 paisa per unit, right. So, as the volume is increasing, it is reducing the selling price, or vice versa, we can say that as the selling price is getting reduced, the sales volume is increasing, because they have a inverse relationship. The variable cost of manufacture between this level is a variable cost is 15 paisa per unit, right. Fixed cost is 40,000. At which volume of production will the profit be maximum, right. So, I need to see that where the volume will be maximum, right. So, you see in this case the fixed cost is not changing, the variable cost per unit it is not changing, right. So, with the increase in volume, right, what will happen? The sell revenue will increase, but the selling price is changing, right. The selling price, as I am increasing the volume, the selling price is getting reduced, right. But the cost structure remains unchanged, right. So, let us look at it. So, statement showing the contribution at various levels, 60%, 70%, 80%, 90% and 100%. So, at 60% the unit is 60,000, and 70% 70,000, 80% 80,000, 90% 90,000 and 100% is 1 lakh. See this in this case the selling price per unit is changing, right. So, in first case what will happen? 60,000 into 0.9. So, sales revenue will be 54,000, right. So, it is coming at 60,000 into 0.9, right, 54,000. In next case 70% capacity, the selling price remains same 90, right, 0.9 rupees 90 paisa. So, 90 paisa into 70,000, it is 63,000, right. In third case the volume becomes 80,000, but the price is falling now to 0.75, right. So, 75 paisa into 80,000, it is 60,000, right. 67 paisa into 90,000, I am getting the sales volume of 60,300, and finally, at 100%, right, at 100% the selling price is 61 paisa per unit. So, 61 paisa into 1 lakh, my sales revenue is 61,000, right. As we discussed earlier, that with increase in sales, the variable cost per unit does not change. Here also the variable cost per unit, it remains at 15 paisa. This 15 paisa will not change, right. This 15 paisa will not change. So, I will multiply 15 paisa into the number of units, right. So, 60,000 into 15 paisa is, if I multiply 54,000 into 15 paisa, I am getting 9,000. And you see, with increase in production level, the total variable cost is increasing consistently. So, in 70% capacity, it is 70,000 into 15 paisa, that is 10,500. Then 80,000 into 15 paisa, 12,000. Then 90,000 into 15 paisa, 13,500. Then 1 lakh into 15 paisa, so it is 15,000, right. So, these are the this is the variable cost. Now, from the sales revenue, if I deduct the variable cost, I will get the contribution. So, 54,000 minus 9,000, my contribution is 45,000. 60,300 minus 13,500, I am getting 46,800. 61,000 minus 15,000, I am getting 46,000. So, out of, now we can see from here, out of this 5 levels of production, 60%, 70%, 80%, 90% and 100%, right. The contribution is highest in case of 70% capacity, right. We are not considering the fixed cost here. You see, this fixed cost we are not considering here because this information is not relevant. So, we can ignore it, right. It is an irrelevant cost. My contribution is getting maximized at 70% capacity level, which is 52,500. So, I should follow a production level, production activity at 70%, fine. Okay. Next question. P Limited is at present operating at 80% capacity level, the production being 15,000 units per annum. The company operates a flexible budgetary control system. The following relevant cost data are obtained from the company's budget at different capacity utilization levels. Capacity utilization levels, sales 80% is 20 lakh, 100% is 25 lakh, variable overhead 2,25,000 and 2,50,000, semi variable overheads 1,05,000 and 1,11,000, fixed overheads 4 lakh, 4,70,000, output is 15,000 and 18,750. So, 100% capacity level, the output is 18,750, at 80% it is 15,000. Material and labor cost per unit are constant under present conditions. The management expects a profit margin of 10,000 on sales. You are required to compute the differential cost of producing additional 3,750 units by increasing the capacity utilization level to 100% and price per unit at 10% profit on cost, right. So, this is my condition, and the differential cost of producing additional 3,750 units we need to calculate, right. The company is currently working at 80%, right, at 15,000 units, right. So, 15,000 units is the 80% capacity, fine. How we can solve this? We can solve it like this, right. Computation of combined cost of material and labor. Sales at 80% capacity is 20 lakh, right. You see, at 80% it is given in the question, it is 20 lakh, less profit 10% on sales 2 lakh, cost of goods sold is 18 lakh, 20 lakh minus 2 lakh is 18 lakh, less the variable overheads. Variable overheads, they are given in the question 2,25,000 currently, and semi variable overhead, it is given here 1,05,000. So, 1,05,000, and fixed overhead is it is coming it is given as 4 lakh. So, it is 4 lakh. So, it is 4 lakh, right. So, 7 lakh 30,000. If we add all these three, we get 7 lakh 30,000, right. Cost of material and labor, right. It is, if I so it comes to the 10 lakh 70,000. If I deduct, right, from variable overheads from cost of goods sold, I am getting the value of material and labor at 10 lakh 70,000, right. So, cost of material and labor, this is for the 80% capacity. Now, at 100%, the cost of material and labor will be how much? 10 lakh 70 into 100 by 80. So, rupees 13 lakh 37,500, right. So, this is the cost of material and labor, and this I need to calculate at 100%. So, now the statement of differential cost, right. So, 15,000 is the current current production capacity, and I am adding sorry, I am adding 3,750. So, my total production unit is now 18,750 units, right. So, material and labor at 100% we calculated here 13 lakh 37,500, and if I reduce it at 15,000, it will become 10 lakh 70,000, right. The variable overhead is 2 lakh 50 and 2 lakh 25, right. As you see, it is given here 2 lakh 50 at 100%, 2 lakh 25 at 80%. Same variable overheads 1 lakh 5, right, and 1 lakh 11. Fixed overhead, it is 4 lakh 70, right. So, my differential cost, right. So, this is the difference between 13 lakh 37,500 and 10 lakh 70,000, 2 lakh 67,500 in material and labor. In variable overhead, it is 2 lakh 50,000 minus 2 lakh 25,000, that is 25,000. In semi variable overhead, it is 1 lakh 11,000 minus 1 lakh 5,000, that is 6,000. Fixed overhead is 4 lakh 70 minus 4 lakh, that is 70,000. So, my total differential cost is coming 3 lakh 68,500. So, if I add these differential costs, if I add this, I will get 3 lakh 68,500. So, this differential cost is for 3750 units, right. 3750 units, 3 lakh 68,500. In the question it is given, that minimum price unit is 10% profit on cost, right. So, this is the norm. So, I add profit. So, 110 36,850, 36,850 is 10% of, this is actually 10% into 368,500, right. So, my sales value will be this plus this, right. It should be 4,05,350, right. So, this is my sale value for this many units. So, at what price I can sell if I want to maintain this profit over cost, it is 108.09. So, this should be my selling price per unit for additional units, right. So, this is my this is the solution of this. Now, we can slightly we can explore it further. Suppose currently the 15,000 units are sold at 20 lakh, right. So, I can calculate my selling price here. So, my sale revenue is, so my current sales revenue at 80% capacity, it is 20 lakh, right, and output is 15,000. So, I can divide 20,000 by 15,000. So, if I do this, I am getting 400 by 3. So, it is 3 ones are 3, 1033 is a 9, 133 point something, right. At this price I am currently selling now, but if I increase my capacity to 100%, I can offer my product at a much lower price at 108, which I can use for penetrating new markets, right, for gathering the market share, giving a discount to loyal customers, and thereby increasing my profitability and business volume. So, here the chapter on decision making ends. Please go through the study material which is uploaded in the forum, and get back if you face any problem. Thank you.